You don't find Bitcoin until you're either personally or your business has been so destructed that you can't get out of a hole, that you're looking for something to park your money while you figure out a plan. In my opinion, 5 years from now, almost every business will be in MicroStrategy situation where they will be competing against debasement and they will be competing against the pressures of competitive companies. But these will be AI native businesses, of which there will be hundreds of millions, if not billions of them, because one person with an AI agent can set up 100 businesses. That's the problem, is that the scale of competition goes through the roof. And so the investment gets into, where will people put a store of value where my money is going to be worth more than it is today, 3 years from now? That's getting harder and harder every year that we go forward.
Imagine waking up one morning and realizing your biggest business competitor isn't a Fortune 500 company, it's a single entrepreneur running 100 AI-powered businesses from a laptop. Now imagine that same reality playing out across every industry at once. The rules that built wealth over the last century suddenly stop working, margins collapse, competition becomes infinite, and cash sitting on your balance sheet quietly loses purchasing power every single year. In that world, the biggest question isn't how to grow your business, it's how to protect the wealth you've already created. That's exactly where Jordi Visser believes we're headed. His argument isn't simply that artificial intelligence will make companies more efficient. It's that AI fundamentally changes the economics of competition itself. As AI-native businesses multiply at unprecedented speed, traditional competitive advantages begin to disappear. At the very same time, governments continue operating in a monetary system where currency debasement remains an unavoidable feature, forcing individuals and businesses alike to search for assets that cannot be printed, diluted, or easily replicated. And that's where Bitcoin enters the conversation. Visser argues that most people don't actively go searching for Bitcoin. Instead, they arrive at Bitcoin after experiencing the consequences of a financial system that no longer preserves value the way they expected. But before he connects those dots, he lays out a much bigger macro framework, one involving the Federal Reserve, artificial intelligence, tokenization, and why the financial system itself may be on the verge of its biggest structural transformation in decades. Before we jump into Jordi Visser's fascinating breakdown, make sure to hit the like button, subscribe to the channel, and turn on post notifications so you never miss our latest analysis on Bitcoin, macroeconomics, AI, and the future of global finance. And when you're finished watching, let us know in the comments, will AI make Bitcoin more valuable over the next decade or less? Now, let's hear Jordi explain why the macro picture may already be changing.
Well, I agree with their decision. I actually like what Kevin Warsh is doing. I believe using old academic models is going to be a problem. This is one of the reasons why the hedge fund leverage situation is going to come down. There's a reason why, and I'm going to show some charts which are going to show people how structurally the stock market has completely changed. For those of you who care about factor risk, I will go through a lot of charts on factor volatility, on S&P volatility, on NASDAQ volatility, comparing them all on single name volatility versus index volatility. The market's changing, and the market's changing because of AI. Kevin Warsh is saying the Fed needs to change because of AI. If you're using the prior 3 months of data in a world that is now every month is equivalent to 3 months or 30 months, if everything is 10 times what it used to be in terms of the speed, how can you use inflation data from yesterday to make decisions other than from the psychological basis of dealing with humans? Well, in the case of what the market reacted, we got a steepening of the yield curve when he basically said, well, we didn't really need to do anything because you guys wanted a tightening and the market has tightened for us. 10-year rates have gone up, 2-year rates have gone up. So really the market already did it for us while inflation came back down a little bit. So we got time to wait for inflation and see where it is. I think this new no forward guidance going into the meeting, people had a 40% chance of a tightening, where in the past, there'd have to be an article released beforehand to be a tightening. I think this is going to add more volatility into the system and more uncertainty. So it gets back to the point I made about leverage. If the Fed was also contributing to the leverage in the system through QE, meaning whenever assets fell, they would grow their balance sheet, he wants to shrink his balance sheet. Well, that means he wants the Fed to be less levered. All of this leads to the same conclusion, which is there's going to be less leverage in the system. And as tokenization comes, which I believe he and Besant have both talked about, tokenization will release money supply in a way that will allow the Fed to delever at the same time. That's what I believe is going to happen, is that AI agents and tokenization will allow dormant assets, which are just sitting there but have a value, to be monetized in a way in daily liquidity and in transactions through pieces of them and fractionalization. And I think once that happens, the Fed won't be needed as much. And I think him and Besant both believe this as people that believe in crypto and Bitcoin.
Do you think it's a good idea for the Fed to get delevered?
Yeah, I think it's going to happen, and I do. I think it's going to help the distribution of wealth problem. So I think the K-shaped economy has been formed because of the leverage of the balance sheet. I think since the great financial crisis, to avoid a Great Depression, they had to use their balance sheet whenever there was a problem. We have a financialized stock market. But right now, it doesn't seem like we need those tools the way we did in the past. One is there's not as much leverage, and the leverage that is growing where CDS is going wider is on the best balance sheets in the world, the hyperscalers. That's why I'm not worried about them. Their CDS should be going higher because clearly the markets are having trouble providing the capital on a short-term basis that's come to the market. I think one thing people need to recognize is that SpaceX comes to the market. Plus, there's a lot of lockup that's coming in that's going to hit the market. You've got Anthropic, you've got OpenAI, you've got all of them raising money for CapEx for these things. We're tapping the market in big size. Google did an $80 billion. These things have never happened before. It takes a while for this kind of capital coming to the market to be digested. And I think that's what we've seen in AI as all this has gone on. So I think the Fed balance sheet will help the K-shaped economy. I think you have to look at this the way Kevin Warsh does. He's not saying he's going to shrink the balance sheet in the next year. He's saying opportunistically when he can, he wants this stuff to come down, but it would also happen with rates coming down. So I think when he's comfortable on inflation and when the labor market is soft enough, I think you're going to see rate cuts combined with the balance sheet being run down a little bit.
Visser's argument goes far beyond whether the Fed cuts or raises interest rates. His real point is that policymakers are trying to navigate an economy that's evolving faster than the data they rely on can measure. As artificial intelligence accelerates productivity and tokenization unlocks trillions of dollars trapped inside illiquid assets, the financial system itself begins operating under an entirely new set of rules, one where leverage declines, capital moves differently, and traditional monetary policy gradually loses some of its influence. But if those structural changes reshape the financial system, an even bigger question follows. Where does wealth actually flow in a world dominated by AI? That's where Visser turns his attention next, laying out why he believes crypto, tokenization, and especially Bitcoin could become some of the biggest beneficiaries of the largest redistribution of capital we've ever witnessed.
I think over the course of the next 5 years, the most important force that's going to happen is AI. So let's just assume that everyone starts with one number. And just assume this number is true, that the total household net worth of the planet Earth is about $700 trillion, and the total value of crypto is about $3 trillion. So we've all heard, and this is the way I value crypto, what I think will happen over time is that that total value will either stay the same overall. So it's, let's say, 703 trillion. 700 trillion non-crypto, 3 trillion in crypto. Let's assume in 5 years, it's still 703 trillion. What I believe will be happening is that the money will be redistributed. Now, some of that will go into crypto in terms of this. And the main point is, I believe small businesses win in AI. So let's assume the winners of the stock market, the companies that win the revenues, they're all AI native. Well, the AI native businesses grow bigger, but a lot of these AI native businesses are like my business, like Cursor, like Anthropic, like OpenAI, meaning they're AI native businesses with very few employees. They own the majority of their business, not in the case maybe of OpenAI and Anthropic, but of most private companies, the founders are going to own most of their business. And let's assume it only goes to a $100 million business. Well, in the past, that $100 million business needed to go to 5 billion. And I don't think that's going to be the case anymore. And the founder's going to own 75%. So crypto is going to end up being, say, $100 trillion in a decade. The rest of the assets of the world will still be 603 trillion and will still be around the same overall number. There'll be a transfer. And then within the 600 trillion, I think the public stock markets will be effectively unchanged and private businesses will grow in their valuations. And you'll be able to access these through ETFs that are tokenized, that give you every asset in the world. And that's what the future is going to look like. And as someone who ran ETFs at Morgan Stanley back in the late or the early 2000s, I can just tell you that nobody believed in ETFs back in 2000. Now it's an accepted thing that dominates the market. Tokenization is a massive change to the structure of the market. AI agents are a massive change, and all of this stuff is coming. It's a certainty. It's not even an if. It's not a when anymore. It's happening, and it's happening this year.
Let's say that you were 25 years old, just starting your career. What would you do in able to benefit from this trend? Whether you were starting a business or going and looking for a job, like how would you position yourself, given everything you've seen in the past, to get the tokenization trend as maybe a tailwind?
Well, ETFs, the changing of products or structures didn't impact, in my opinion, the overall situation. It hurt business. It hurt mutual funds. It obviously changed stock ownership, meaning BlackRock has been a big winner, but it's not like they've gone parabolic. I think the way to have made money since ETFs came out really was about innovation and which companies were going to dominate. You're basically betting on where moats will be. Warren Buffett made money on investing in moats. The Mag 7 have moats. Now, their stock prices have not moved over the last year for the hyperscalers. We're seeing multiple compression. But right now, I'm trying to invest in scarcity because I think we're at the phase of innovation where we can't actually produce the energy necessary. So we're converting, as David Friedberg said in the podcast this past weekend, we're converting molecules into bits. And I want to be involved in the molecule side right now. And that's why I focus my attention on scarcity. So scarcity is not just Bitcoin. Scarcity is Micron. Scarcity is GE Vernova. Scarcity is all of these things that are necessary to build out the compute that are still going to have the earnings growing. Their multiples can compress, and this is the thing people have to understand. Just because you're making money, I believe in multiple compression, because even for these companies that are based on scarcity, in 3 years, when humanoids are a reality and they're making it cheaper for every physical business, meaning they're involved in buildings and being involved in the semiconductors, including all of the intelligence at the level, I think all businesses and ideas will be disrupted. And that means you have to get into the only thing that gets hurt the least. And that's the thing I want to make sure people realize. If you don't believe in Bitcoin, you have to go back at some point and go listen to the Michael Saylor interviews in 2021 about why he did this. He did this because of two forces that were hurting him. One was competitive innovation. His business had $1 billion on the balance sheet, but he could not compete with the size of Microsoft, and the competition was just not there. And this was after the Mag 7 had come to existence. He talks about it all the time. So one was he lost to innovation. Number two, he was now losing to debasement from the government. They had moved rates down to zero. So he had a successful business with $1 billion of balance sheet, but with very, very difficult in terms of making money. So he made a decision to invest in something that was going to be defendable versus debasement. I think where Bitcoin comes in is the quote that he uses all the time. You don't find Bitcoin, Bitcoin finds you. You don't find Bitcoin until you're either personally or your business has been so destructed that you can't get out of a hole, that you're looking for something to park your money while you figure out a plan. In his case, Bitcoin went higher. It allowed him to do what he's done with strategy, but that's why most people think this is a scam. In my opinion, 5 years from now, almost every business will be in MicroStrategy situation where they will be competing against debasement and they will be competing against the pressures of competitive companies, but these will be AI native businesses of which there will be hundreds of millions, if not billions of them, because one person with an AI agent can set up 100 businesses. That's the problem, is that the scale of competition goes through the roof. And so the investment gets into, where will people put a store of value where my money is going to be worth more than it is today, 3 years from now? That's getting harder and harder every year that we go forward.
Whether you agree with every one of Jordi Visser's predictions or not, his central thesis forces investors to think differently. Artificial intelligence isn't simply another technological breakthrough like smartphones or cloud computing. It has the potential to dramatically increase competition, compress profits, lower barriers to entry, and fundamentally change how businesses create and preserve value. When one person can operate what previously required an entire corporation, every existing business model comes under pressure. That shift also changes the investment landscape. If productivity explodes, but competition explodes even faster, finding assets that remain scarce becomes increasingly important. That's why Visser believes the conversation eventually circles back to Bitcoin, not because Bitcoin replaces every other investment, but because it offers something the AI era cannot manufacture: provable scarcity. More AI can be created. More businesses can be launched. More digital products can be copied. There will only ever be 21 million Bitcoin. Perhaps the most powerful idea from this discussion is that Bitcoin isn't competing against technology, it may actually benefit from technology. As AI accelerates innovation and tokenization expands access to global assets, the demand for a neutral, decentralized, and scarce monetary asset could grow alongside them. In Visser's view, Bitcoin isn't an obstacle to the AI revolution, it's the financial foundation that helps people navigate it. Whether the future unfolds exactly as Visser expects remains to be seen. But if AI continues disrupting industries, if tokenization transforms capital markets, and if fiat currencies continue their long-term trend of debasement, the case for scarce digital assets becomes increasingly difficult to ignore. Bitcoin doesn't have to replace everything else to win. It simply has to remain the asset people trust when everything around them is changing faster than ever before. If you enjoyed this analysis, don't forget to leave a like, subscribe to the channel, and turn on post notifications so you never miss our latest videos. Share this video with someone interested in Bitcoin, AI, or the future of investing. Thanks for watching, and we'll see you in the next one.